Hey followers, today I want to tell you where could we go and what's my action plan is. But before you watch, I can tell you the market conditions right now are super difficult, and I'm gonna explain you why and my thoughts. But first of all, let me give you some information about the market, the news which coming out, and so let's go into that. So first of all, if we refresh it, then we see the advanced GDP went better than expected. So previous we've been at 3.2%, the forecast was 2.6, we got 2.9. Unemployment claims went better as well. So yeah, not super good news, but better than expected. And tomorrow are the most important news with the core PCE data. If we're checking this tool, let's refresh it as well. The CME watch tool, what is already priced in for the next Fed meeting, what can we expect? And as you see, we can expect 25 basis points. And the next topic is the earnings, because it is super difficult to analyze the market with the inflation, interest rates, because we had similar situations, 2008, dot-com bubble, and 1980, we had similar situations. So we have to check if the companies are really doing bad or not. And as you see, we have this week interesting earnings, and the earnings from yesterday, as you see, they went a little bit better, right, as you see here. And so as well here, the companies are doing better in the earnings from yesterday. Then there's another interesting thing, and this is the savings now and the credit loans. And I want to explain you how how the market went in 2008, right? And why we got the whole financial crisis. So we started to give out credits to everyone, right? Like, for example, let's say you don't even have a good job or not even have a job, you could get a credit to buy a house. And to doing that, the bank obviously has to get more money to give that to the people to buy the houses. But obviously, it works until either way there are no houses anymore to buy, or the other way, the bank has no money anymore. When the bank cannot give you money anymore, then it's stopped growing. Or the other thing is when the people cannot pay back the credits. So what happened is that the bank didn't got any money. So they needed some money to get everything working again. And what they did is, let's say I gave 10 people credits, and they have to pay me back in 10 years 1 million. So I went to someone else and I said, hey, you know what? You can give me 800,000, and later, in 10 years, I give you all the credits from the people who has to give me credits. So I give you the problem. In 10 years, you can go to the people and you can get the credits from them. And then obviously the banks had some money to get more credits out for buying houses. And for them, it was obviously a profitable scenario, because in the end, they have the houses if the people cannot pay back. And the problem, what happened was, then in 2008, the people who bought the houses couldn't pay back the credits, and then obviously there was so much money in the market, and the banks didn't got any money back because people couldn't get something back, and then where the whole bubble exploded. And we have not similar situations, but with this big of credit loans and this of savings, like as I said, like I think 2 months ago, I said the only thing when you have to sell some cryptos right now is if you need money, right? I think besides that, nobody is selling cryptos because obviously if nobody needs money because they have their jobs, why should they sell on a minus? So they keep holding unless there are people who has to sell because of they have to get the credit back, or the miners because they have to pay their bills as well. These are the people who has to sell. But as you see, if the savings are that low right now, it might happen that the people needs to sell because they need money to pay their bills again. So this is just a really interesting thing. And if you're going further, you see the overall liquidity. And if liquidity is going down, obviously the market has to go down because market is following liquidity. That's not possible that liquidity is going down and market is going up. And you see that here that the liquidity is going down as well. The person Michael Berry from the Big Short, maybe you know it, he says this post, maybe we are here and we see something like that. Yeah. So this is just the thing what we saw on 2001, and maybe just the same happened, and we are just in one of the rallies to the upside, and then seeing the dump to the downside. Yeah, and then yesterday on the pump to the upside, we saw another 13 million in short liquidations in 1 hour, which is crazy again. But let's talk about the market overall. What do we see? First of all, we see the VIX, which is as well in critical level because every time when this is in this zone, we saw the pump to the upside. We can still go to this level here, and as you see, it's still very high. I mean, the lowest level what we had was 8. We can still go to this level 15, which means then we maybe make new highs in the S&P, which will say as well that we make another highs in BTC. But this is already the critical level. And if we're going to the dollar index, which is important as well, we are just on the same level here. And you see everything worked fine on this trend line. So if we're checking it like that, everything worked perfectly out. So we're touching it, and I think the best buy momentum is if we still coming to this level here, and I'm just doing it again, and then going back to the upside. So I still think this level here is the best opportunity to buy the market or to buy the dollar, which means then that the crypto can go down. And as you see, you have, and I'm not gonna lie, you have so much information to why the market could go up and why the market could go down. But in the end, it doesn't make sense that we see all the long and short moves to the up and down side. Because in my world, in my thoughts, is that the market can just go down and not to the upside. So yeah, just to that. And if we're checking then, the S&P 500 just went into the trend line down below, and if we get a close above this level, above this breakout candle, then the chance to see a new high is pretty high. I'm still positive that we still see the market to the downside. If we're checking BTC just went into our fair value gap and retraced, and now we just have to hold this level and going further down before we going up and closing above 23,900. And if we're closing above 23,900, then the possibility to going higher to 27,000 is high. And obviously, if we're then going higher, the possibility to going above 32,000 is high as well. But there is a point when obviously as well, because I'm still more to the short side, but then there will be a point when I say, okay, now I have to accept it that we are really in a bull market, because I still don't believe that we're in a bull market. Everything is really, I think over the last 2 years, we had a really big tech company bubble, because all the completely tech industry went crazy up. and we see a lot of unemployment in the tech companies. This is one thing, I think. And then if we're checking to the NASDAQ is coming as well to the trend line. It still has this one open, so the possibility that we still go to this fair value gap is high. But it's still a big move to the upside, right? This fair value gap was holding, but we are re-entering it right now, creating a double high. So the possibility of getting over this high is pretty high, so that we go at least another 200 points to the upside. And then there's a chance as well to taking this high to coming to that level. And which means as well, we might see another pump in BTC maybe. And overall, it's a super difficult situation. But still, I would say take profits if you made some profits in this pump to the upside, because there is still a correction to the downside, right? If this is a bull market right now, we still might see the retracement to the downside. But overall, I still don't see this is the start of the bull market, because it just makes no sense. And obviously as well, if we checking the thing what I'm all time showing, inflation against interest rates, and if we are pivoting, then we all time see the top. So I think we see a lot of manipulation right now. I think as well on-chain data are interesting, like how many bitcoins are we moving to the exchanges are interesting, but all the, how they called, all of these, we can, I would not even trust on that, because all that, or as well this one, because it's just calculated on a moving average, right? And I can give you two other moving averages, which gives you every time a short signal. So I wouldn't look into this one, because this doesn't make sense. But on-chain data, like how much cryptos we move into exchanges, how the hash rate is going, this is interesting. But everything else is kind of risky to look at, because then you just see all times long signals, and obviously we just have 4 times that signal then, if this is a long signal. And I mean, what kind of signal is that? If we below this green band, we are long. I mean, then we can move until 1000 and we coming up again. Does it mean that the band was correct again? But normally it was super late. So yeah, we have to think about that. We have to look about that, and I think it's super difficult to analyze the market and giving a clean direction in which direction I would tell you my view of the market. So my overall view, you see, this sentiment is going up as well. We're going higher and higher. What I would do is, if we're closing above 23,900, I would trade up to 27,000, then going lower again. But overall, I'm not putting my HODL portfolio into the bull market right now, because I think we have the start of the bull market. I don't do that because I'm still waiting until the Fed is putting money into the market. And if we don't see that, I'm still on the sideway. And if I miss it, right? Then I miss a big opportunity, because maybe I just analyzed it wrong. But I'm still positive that this is not the bull run, and we still go lower, and we might see maybe lower lows as well. But I'm normally in my view, I'm super positive that we see lower lows. But we see a lot of manipulation right now in the market. So interesting charts are Solana, VeChain, if we're coming up to that level. As you see, we didn't got a close on Matic, so we might doing this thing here to going further up. And yeah, that's to my analysis. I hope you're doing great. Pay attention to the market. Tomorrow, interesting news, and then of course in the February, the Fed meeting and the interest rates, the inflation rate as well, are super interesting. So stay tuned, and I will keep you updated coming days as well. Bye.